The process of recognizing market trends and entering trades with trend lines and a 200-day moving average is crucial for any trader. Finding suitable buying and selling opportunities is the top priority for every trader. You can only make a decent profit from the market if you enter the trade at the right time and in the right place. Take a close look at this chart. In your opinion, should you buy or sell at this point? To understand the position, we need to carefully examine the candlesticks and, with the help of certain tools and patterns, determine the market trend. One useful tool that can help us roughly recognize the market trend is the 200-period moving average, EMA 200. We plot the EMA 200 on the chart. We see that the market is likely in a bullish trend. Now we need to determine which direction the market is headed. To better assess the trend, we draw a descending trend line. We notice that the trend line has been slightly broken upward, indicating a possible uptrend. Now we need to identify the support and resistance areas and draw a line at that point. We see that the price has intersected this line several times. Now we wait for the candlesticks to exit the channel and hit the resistance level. As you can see, the candlesticks have exited the channel and encountered resistance at the expected level. Once the pullback is complete, you can enter a long trade and place your stop loss just below the last low. You can also set your risk and reward at a 2-to-1 ratio. Congratulations, as you can see, your trade is closed with a profit, and you have taken your cut from the market. Be happy, healthy, and wealthy.